Hello, community. Can you hear me? Hello, community. Can you hear me? Okay, I think it's good now. All right. Sorry about the technical challenge. We are back now. Again, let me start from scratch. Welcome everyone. Nice that you were able to make it to today's community event. Happy Thursday, everyone. I hope you and yours are doing fantastic. Sorry about this technical difficulty that we had right now, but we on it. Let's just jump straight to the community. Let me check with you who is here. Let me acknowledge all of you. Today's topic, as you see, there's no surprise. It's cryptocurrencies, the ultimate asset. So what we're going to discuss today is we always talk about how the cryptocurrencies are outpacing other asset classes, but we're going to discuss this and analyze this in more detail. We're going to really look at it more specifically and it detailed, so that we're really on the same page and we really appreciate this asset class that we are in. And especially, it's not just enough to be in this asset class. What are the attributes? What are the criteria that we need to meet also to be a superior asset class than the other classes that we have? So we'll do a contrast and compare and ensure that we get that right. Also, what I was saying earlier when the mic was not on, I was discussing how it's so important for us to really understand which situation we're in right now. Currently, we're in the middle of a time where information and education is key. We're in a very new platform. We're in a new industry. We're using a new technology. So we need to be informed and educated on various fronts, So this is why these events, we always lay major emphasis on these events. We aim to literally inform, educate ourselves, and inspire ourselves as well. And this is much needed, right? The more informed and educated we are, the more confident we can be in ourselves and in our ecosystem, in our industry as well. With that said, let me start with acknowledging everyone that is here today. Queen Lati, welcome Queen Lati. Hello Boran family. It's another great day again to be equipped in our journey of crypto with none other than our teacher Steve. Steer the ship and cruise with us. Thank you, Queen Mom, for this ecosystem. Thank you also, Queen Lati, for your persistence, consistency. Thank you for your leadership. Thank you for always being part of these community events. We have our brother Davis here. Good day, Steve and community. Let's all be prepared to witness the crowning of the Liquidity King BRL. Absolutely. Very well said. Thank you also, brother Dave, for the beautiful TikTok videos that you made. Very much appreciated. Queen Grace is here as well. Hello, Queen Grace. Always excited and eagerly looking forward to this session. Thank you, Steve, for your dedication and commitment to educate, inform, and inspire us into crypto space. We love and appreciate you both. Thank you so much, Queen Grace. You are also very much appreciated for all that you do to the community, your presence on every community event, on all social platforms. You're always active, engaged. You're very much appreciated as well. Cryptorizer is here as well. Hello, Cryptorizer. Hello, community. Let's get those questions ready for Brother Steve and strap in for another informative session. Bull run to the moon. Thank you very much, Brother Cryptorizer. We appreciate the consistency in these beautiful banners that you keep making. They're very valuable. They're very classy, and they say a lot about our ecosystem and about yourself. So thank you so much. You're very much appreciated for that as well. Yes, I got this. Don't worry about the Cryptorizer. Queen Val says, Jumbo Bull Runners. Happy Thursday to us all. Hello, Mr. Steve and Queen Mother Wino. Hope you are all having a fantastic day. Thank you very much. We are having a fantastic day here, besides the technical difficulty we had with the audio. However, we are great. Thank you for asking. I hope you are too. I see you, the Don. I see you, Junior. Nice having you here in the community. Hello, everyone. I'm glad and honored to be part of this. We are very, very much honored as well to have you here. We are very, very happy to have you here today. Very, very thrilled. Welcome to the community, Junior. We have links here to our Telegram groups from Bull Run, Killer Whale, and Survivor as well. If you're new in the community, we encourage you to join our social platforms. We are very, very active, as you can see, not only on YouTube, but also on Telegram and on Twitter as well. So feel free to join and join our community. We will all embrace you and be part of your crypto journey. We have Brother Glenn here as well. Good day, Steve, and the BRL community. Let's all get ready to be prepared and be prepared to witness one of the wildest bull run ever. Beautifully said. That's very, very true. That's it will be a wild bull run this cycle. And there's so many things that are being aligned right now and are being put together that is just amazing, you know, that we can really look forward to something beautiful like this. Well said, Brother Glenn. Queen Mother Winner herself says, greetings, queens and kings. Glad to be amongst our amazing BRL family. Looking forward to another informative and educational session with Steve. Thanks, Steve, for all that tireless efforts. Thank you, too, for all your tireless efforts, for your commitment, your consistency, your hard work, your leadership, your encouragement, your kind words. You're very much appreciated, Mom. And Queen Val says here, hit the like button. Let's engage with the video. As we all know, the more we engage with it, the farther reach it will have. And that's the whole purpose. We want to reach as many people as possible so that they're aware and of our industry, the blockchain technology, as we are so early in this space, and of course also to embrace our ecosystem and be part of our journey. We have Queen Pat D here as well. Hello, family. Another blessing to us all with educational enlightenment. Thanks to you, Brother Steve, for elevating our crypto knowledge. It's an honor for me to always have these sessions with you. I just feel just as honored to be part of these community events on a weekly basis. So thank you too. Thank you for always showing up and being part of here, being part of this this session today. We have Queen Alice. Hello, everyone. Hi, Steve. Thanking God for this opportunity. God on our side. Beautifully said, Queen Alice. Beautifully said. Thank you for always being part of these sessions. I also see you all over the social different platforms. You're very, very much appreciated. Nice having you here. Great brother Theo is here as well. He says, greetings, my great brother Steve. Dearest great Queen Mama Wino and my wonderful Bull Run family. Looking forward to another fantastic, educational, inspirational, and empowering session. Let's go. Always a pleasure seeing you in the community, my great brother Theo. I hope you and yours are doing great. We have Queen Cynthia here as well. Hello, everyone. Looking forward to today's session. Welcome. Nice having you here with us today. It's always a pleasure seeing you in the community. We have Queen Nancy with us here as well. Happy Thursday, BRL community. I'm looking forward to an educating live session, as always. I am so delighted to be amongst these amazing, positive-minded people. Love and light to you all. Beautifully said. We are also thrilled having you with us. And thank you for your positive energy and for always attending these community events. We have Princess Mel here as well. Good evening, family, and good evening, Steve. I'm glad to be here. We are happy having you here with us as well. So it's a pleasure having you here with us today as well. Thank you for the feedbacks. I hear that the sound was good, so I'm going to skip those. Queen Patricia says, good evening, family. Glad to be here. Thank you again, Steve, for your commitment. Stay blessed and protected always. Thank you so much, Queen Patricia. You are very much appreciated. Always a pleasure seeing you in the community as well. Uncle George, it's so nice to see you here. Always a pleasure seeing you in the community and all these different various platforms. It's a pleasure. Thank you so much for all that you do for the community. Hi, Boran family. Hi, Steve. Happy to be part of another enlightening session. It's always a pleasure having you here with us today as well. Survivor tweet is out. Let's retweet and like as we listen. So we see that the first one is out, community. As we are going through this session today, let's engage with the tweets as they come in. Pay attention to the chat, as I'll go full screen now and I won't be paying attention to the chat. So as they come out, please let's engage with the tweets as they're coming in. Mike Jones, pleasure having you here in the community as well. Steve is the goat. We are all goats. We are all, it's this the beauty of the blockchain technology. We are all equally great, you know, but thank you, Mike Jones. Welcome to the community. Always a pleasure having you here. Welcome to the community. My brother Michael says, greetings family, nice being here. It's a pleasure having you here as well. Always a pleasure seeing you, brother Mike. Thank you for taking your time and being part of this session today. With that said, I see the list keeps getting longer and longer. It takes us like quite a while to go through all these comments. Soon we won't have the time to go through all these comments because I see how the community is really growing. This is a good sign, so this is great. With that said, community, let's really jump into today's topic. There's really a lot to discuss today, as the topic is really broad and we want to really get as much detailed as possible. As we all know, one of our 4 pillars is education, right? And education is key. So let's just glance at today's coin market cap. We see we're still in the fear zone as far as fear and greed index. There's really not much to say. Bitcoin has been always between 57 and 58 all day, the last 48 hours. Ethereum as well. However, with Ethereum, we know what's about to happen. Hopefully this week, the ETFs will go through. If not, then next week, you know, it's not a matter of if, it's more of a matter of when. And once that happens, there'll be a big rush in the market. The difference between Bitcoin ETFs and Ethereum ETFs is that with Bitcoin, it was really strictly Bitcoin, right? And with Ethereum, there are so many applications on the Ethereum blockchain, right? It has the most applications, it has the most liquidity. And as we'll progress through today's session, we'll see how much impact Ethereum really has. And this is why it will have such a bigger impact on the overall economy industry of in the crypto space. With that said, let's get to today's topic. Once more, cryptocurrencies, the ultimate asset. We always talk about this, you know, we always talk about these various assets, right? And today we'll briefly just, you know, go through them and in more detail and highlight them so that we really understand what we are working with here, you know. And this will be a very interesting session today, as it has a lot of information that will benefit us as a community. With that said, let's start with the assets. Again, the question is here, we already have assets, right? Asset classes. Why do we need another asset class, right? Why do we need cryptocurrencies, right? And this is the question we are about to answer here, because we need to understand that we evolve, not just as humans, but even as an industry, right? We need to evolve. And every now and then come a new technology, which we need to embrace and we need to really move forward with, take full advantage of it. And with that, it's like an arms race, right? For a certain period, certain asset classes were good, but then with new technologies, new innovations, we embark in new asset classes and we realize that there are new opportunities, and this is what we want to look at. So we know stocks and shares, right? So with stocks and shares, investors buy stocks and shares, and with this, they literally have partial ownership of the company, right? This is how the first one is stocks and shares, right? So you own partial ownership of the company. Shareholders potentially benefit from the business success, but might also suffer if the company's performance goes down, right? So that's stocks and shares. That's one of the asset classes that we want to look at, right? So as we know also with the stocks, you can dilute stocks, right? Meaning that you can split them. Like just today, Michael Saylor announced that he wants to do a 1-to-10, meaning that he's splitting MicroStrategy stocks 10 in 10, right? So one stock, if you had one MicroStrategy stock, now you have 10. That's called diluting it. That's one of the issues with stocks, right? Is that you can dilute them and you can inflate them, right? And this is really, so you're diluting other investors' shares, and this is one of the downsides with stocks. Nonetheless, stocks is one of the asset classes, right? So second asset class are bonds. What are really bonds? Bonds are literally a form of a loan or debt issued by governments or companies, right? When they want to borrow money. So this is how companies, governments borrow money, right? In a form of bonds. And then also, this is what bonds are, and this is now one of the asset classes existing, and most commonly they're known as treasury bills, like US debts, or like we said, companies can issue them as well. Then you have companies have debts, and this is how they raise funds, right? They use their company as an asset, as collateral, and then they borrow funds, they borrow money against that. So this is a second one, bonds, right? Now let's look at another one. So investment funds. Investment funds are investment pool. It's like a pool where you put your money with other people, and you invest in one or more types of assets. So instead of you going solo and buying your own chosen stocks, you actually coming together and creating a pool, and then you use that pool to purchase investments, right? That's an investment fund. And one of those is we'll discuss it as we progress. So let's just focus on these asset classes that we currently have. So that's another asset class that we have. That's the third one right now, right? So let's look at the fourth one, index fund. So index fund is very unique because with an index fund, really you're actually tracking, right? You're tracking funds, right? And you're literally tracking their performance. The best example here is, for example, like if you have an S&P, like the S&P 500 is the top 500 companies in the US market, right? So you literally would mimic all 500 companies in there, and you would, even based on the company's sizes and shares, based on the market cap, you would go down to that and track all of that way, and that's an index fund. So index funds are here to track an existing market, right? It can be a market, it can be a commodity. The underlying asset is irrelevant. The point is it's tracking that specific asset, right? So an index fund, it's an investment vehicle. Similar to an index fund is an exchange traded fund. And if you focus on and this is very familiar, right? Right now there's a Bitcoin ETF. So the difference between ETFs and index funds is basically, first of all, ETFs are more flexible, right? It's more flexible, and this is how you can buy. ETFs, the price vary throughout the day, and you can buy at any given price throughout the trading day. With index funds, it's always by the end of the day, right? You can buy it. The price will be pointed out by the end of the day. So that's when you realize when the price is, and then that's how you will purchase it. But with ETFs, you can buy it throughout the day, and as the price fluctuates, you can time it or try to time it, buy it lower or higher throughout the day. And index funds are not as flexible. Also, ETFs, they are traded on the stock market, right? And this means that they can be bought or sold anytime throughout the trading day, right? And that's the major difference. And then the other asset classes goes under alternatives. Alternatives are collectibles, right? Like in luxury antiques, arts, classic cars, wines, all of that. But under this category goes cryptocurrency as well, right? So cryptocurrencies also go under alternative investments, right? And then, of course, gold is the other asset class as well. We all know what gold is, right? Gold is a natural resource or commodity which can which can consider for you, well, historically, gold has been considered as a safe haven by some investors when the stock market underperforms, and it means that the real value of wealth, which is gold, will be inflated through the dropping or inflationary fiat money, right? So we always know that, like we discussed this in our last community event, whenever gold price goes up, there's an inverse relationship. So if a gold price goes up, that means that the dollar is weak, right? And as we know, Bitcoin is always looked at as the digital form of gold. So same thing happens. Whenever the Bitcoin price goes up, it indicates that the fiat currencies are weak, right? And this is why there has been a lot of manipulation on gold, silver, primarily gold, because it's in direct competition with the US dollar, right? And same experience we're having right now with Bitcoin, and this is why even the setup is the same, right? JP Morgan holds majority of gold and silver. They hold the majority, as far as banks are concerned, they hold the majority of gold and silver. And ironically, right now, they're holding the majority of Bitcoin, right? More than anybody else. They're the bank with the majority of Bitcoin because they're the ones literally owning the Bitcoin they're purchasing for BlackRock, Fidelity, and all these other asset managers that are using them as APs, authorized participants, right? With that said, now we went through these assets, and let's just briefly go through them again, right? We say ETFs, okay. ETFs we are very familiar with, and ETFs are all sorts of investment that you can literally create for commodities like Bitcoin right now. There's an ETF for gold, for silver, other commodities. There's an ETF for funds, for various items, right? You can trade them from Monday to Friday during business hours, and they're very easy to trade and they're very liquid, right? Dividend stocks are also one of those asset classes, right? Mainly the tech stocks, and there's literally 7 stocks that are literally running the NASDAQ, which is the tech side of the stocks. Short-term debts, which also known as short-term bonds, are also we're familiar with them, mainly treasury bills, US debts, right? And this is also one of the strategies that the US is using through stable coins to really get a good grip of their debts. Real estate, of course, is another asset class. And then, needless to say, and then, of course, alternative assets, which is cryptocurrencies, right? Now, with this said, all these assets that we just discussed, the cryptocurrency has been outperforming every single one of them, right? And let's look at it graphically, right? Specifically Bitcoin. So we can visually see how Bitcoin's returns versus major asset classes, right? So if we look at this graph, right, you see, for example, you see gold is here, you see the S&P 500, you see yield, corporate bonds, company bonds, here in HY, and then we see the Dow Jones. This is usually the NASDAQ, this the tech stocks, and then we see also the bond index bond, right? So you see, like the last 11 years, starting from 2013, you see that Bitcoin has been always literally outperforming all of them. And the only time you see this 3 times Bitcoin wasn't performing was during the bear market, because now they're the bottom, right? So these are the both extremes. Either they're outperforming by far, or it's a bear market, and you see that every 4 years, you see that there's a bear market, right? So Bitcoin was developed or was publicly introduced in 2009. So on the 4th year, right, you see here, this was a high. This was the first bull cycle, right? You see how it went up really exclusively. And then the 4th year, 2014, was a bear market, as you see. This is why minus 58%. But long story longer, you see that during the regular days, if it's not during a bear market, Bitcoin outperformed every single asset class that we just discussed, from real estate to S&P to the Dow Jones to gold, by far, right? So the crypto industry is literally the champion amongst asset classes. There is no debate, right? It's a known, it's public knowledge, right? It's common knowledge, and this is just something we all need to understand. So what does this tell us? If we understand that, okay, there's real estate, right? There is bonds, there is stocks, there is ETFs, and but cryptocurrencies outperform every single one of these assets, right? So now that we understand that, we need to now understand two variables, right? And these two assets, these two items are the opposite of each other. And we need to understand that now that we understand and have recognized an asset class, and we identified that cryptocurrencies are the ultimate asset class because it's outperforming every other asset class. And one thing we also need to identify that the blockchain technology is not just a technology, it's an entire industry. And also we need to understand that it's the way it expands, the way it's adopted, and we'll look at it in more details as we progress. Now, let's focus on why are assets important, right? The opposite of assets is liabilities, right? And in order to really appreciate assets, we need to understand the two contrasts, right? So let's compare and contrast. So assets are what? Assets are things you own, right? That can be converted into cash. That's an asset, right? So that means that assets need to be liquid. How else will you convert your asset into cash if it's not liquid or if they are not liquid? So liquidity plays a major role. Assets and liquidity go hand in hand, preferably, right? So solid, strong assets need to be liquid because assets are things that you own that can be easily converted into cash, right? Now, what's the opposite of an asset? The opposite of an asset is known as a liability, right? A liability. What is a liability? The liabilities are debts that you owe. Things like mortgages, credit cards, student loan debts, and auto loan. You know, these are the things that we discussed in our last community event, right? So these are the main, there are many, many more liabilities, but these are like the main liabilities. You know, your housing, mortgage, your credit cards, student loans, car loans. These are the common liabilities as we know them. So you understand that an asset is something you own that is liquid and you can easily convert into cash. We need to understand that liabilities are debts, simply debts. And these debts are, you owe them. You owe these debts, right? And they come in form of mortgages, credit cards, student loans, and your car loans. We need to keep this in mind, right? We'll come back to this later. So if we move on, we just understood that what assets are and how cryptocurrencies are the fastest growing and the most explosive asset class among asset classes. And now we looked at how debts are liabilities, right? And it's liabilities to the 99%. Debt has two faces. Debt can be a liability or an asset. And this is exactly why I wanted us to understand these two. Debt can either be somebody's assets or somebody's liabilities, right? Let's look at it closer. So private debt has been growing steadily. And this is BlackRock right now, right? This is BlackRock's main website, and they are debt experts. They like to leverage or use debt in their best interest to make even more money, right? And debt is a big business. As we speak, private debt is at 1.6 trillion assets under management globally. And this is still relatively small in comparison because under the group of alternative assets, debts is one of them, private debts. is there. And it's a $13 trillion market based on March 2023 data. So we need to understand, another thing we need to understand is that private debt market steadily grows. It keeps growing, and based on BlackRock's data and analysis, it will reach $3.5 trillion by the end of 2028, right? So obviously debt is a big business, and it's being heavily used by institutions, and we'll get to why that's the case. But just keep this in mind that it's an asset class as well. Private debt is an asset class, and BlackRock is their debt experts, and they, in collaboration with other institutions, to do something together, work things out using their assets and collateral, and keep that in mind. Now, if we look at JP Morgan, right, they working together with BlackRock. BlackRock is a big champion for tokenized assets, right? And as we know, BlackRock obviously is the largest asset manager in the world, with close to $10 trillion assets under management, right? So these two always work hand in hand together. Where you see JP Morgan, you'll see BlackRock nearby as well. As we know, BlackRock has appointed JP Morgan as their AP, authorized participants, right? So one hand rubs the other. So what happens is they called JP Morgan in this case to use BlackRock's shares, right, as collateral. Why is that the case? We just saw how this is a booming business. Debt is a booming business, right? And somebody's debts is another person's assets, right? So for the 99%, for the retailers, debts are liabilities, right? It's a money we owe in form of mortgages, credit cards, student loans, or car loans. But it's an asset for those who can easily liquidate it and convert it into cash. So always keep this in mind. So obviously for the bankers, this debt they want to use is an asset, right? It's in their best interest. And this is what they want to use. So BlackRock said that tokenization of money market funds shares, they want to use this as collateral, right? In clearing transactions, margin calls transactions, and doing this on the blockchain. This will make things more efficient, much more easier, and it will help them use their assets that they already have, because with ETFs, they can't use the ETFs as collateral, but they can use their regular assets that are not through ETFs. They can use those as collateral, right? And to highlight the importance of the impact of debt, let's look at this chart right here. This is real world assets here, and you see this in blue. This is private credit. Let me try to zoom in even more. You see in blue, this is private credit right here. It's 8 billion. So out of 12 billion, 8, which is over 75%, is just private credit. So private credit is big business, like we just saw, right? Because, and this is what we need to understand. Private credit is big business. What does that mean? That means people are in need of liquid assets. People are in need of liquidity. People are in need of cash flow. And because they don't have it, they're taking on private debt. They're taking on debts, right? But in order to take on debts, you need collateral, right? You need assets. So usually this is how, and these assets are usually businesses, right? Or institutions, or like we said, assets, right? So this is how the importance of assets are. You can use these assets as collateral to get, and then you get money or liquidity through debt, because usually those assets may not be as liquid, but you can still back them, use them as backing, and then take on debts through these large institutions, large banks such as JP Morgan. So why are we discussing this? One thing we need to understand right now that is very important. Now that we understand assets, we understand liability, and we understand that the blockchain technology is the vehicle to this new industry, we need to understand one more thing. Why are ETFs created, and why do asset managers, why are they pushing ETFs so much, right? It's because of this. It's because of liquidity. ETFs are extremely liquid, and ETFs are literally backed by the underlying asset, right? And like we said, the owners of these Bitcoin ETFs, of this Bitcoin, is JP Morgan. They are the APs, the authorized participants. They're in charge of providing liquidity so that this ETF market is liquid. They're the ones they're the ones in charge of the supply and demand of the physical Bitcoin, right? So they buy Bitcoin, and then they trade Bitcoin, and then they issue shares, give them to BlackRock, and then BlackRock sells these shares to their investors. But BlackRock doesn't own Bitcoin. It's JP Morgan who owns the Bitcoin. So this is why ETFs give them deep liquidity, right? And this is how BlackRock is making money, right? JP Morgan is making money through the trades. They're trading, and this is how they have the ability to manipulate the prices, right? Because they own the majority of Bitcoin as far as banks. And also, due to this deep liquidity that they established, BlackRock earns fees. This is how they they generate revenue, is by trading. So if there's a gold rush, the shovel seller makes the most money, right? So basically, BlackRock is just offering a platform. That's it. And this platform is used by wealthy institutions or individuals. And this platform has liquidity. So this means that these individuals trust BlackRock simply because its brand and also because of its deep liquidity. So everybody wants to trade with BlackRock's fund because it's liquid. It's as simple as that. And the way they make money, they generate revenue, is through the transactions that are going through, right? Through the trading volume that they receive through the deep liquidity, right? That's how it works. So they're literally telling us, if you want to really generate revenue, ensure that you accumulate liquidity. And once you have deep liquidity, transactions will come naturally, because liquidity and volume go hand in hand. We should understand this by now, right? Wherever you see deep liquidity, you'll see deep transactions, heavy transactions. And this is exactly the business of the ETFs. This is how ETFs generate revenue, through their fees and all of that, right? Management fees, custodial fees. And this is how they generate revenue, just by transaction fees. It's as simple as that. So now that we understand all of this, now that we understand assets, we need to look at what should this asset not be like, What criteria do we have to stay away from? Which aspects do we have to not adopt and actually do the opposite? And the best example of the current monetary system is the best example, right? As you see, in the last decades, we saw how the purchasing power of the US dollar, they lost their purchasing power, clearly, right? Because of three reasons. First one, the obvious one, is inflation, right? Secondly, it's because this is a debt-driven monetary system, right? It's a debt-driven monetary system. And if you combine a debt-driven monetary system with inflation, because you need to inflate to stimulate the economy, you need to print more money. That means that you're inflating, you're causing inflation, you're printing more fiat. And anytime a currency or a commodity or an asset is experiencing inflation, you lose your purchasing power. So this is why you see from the top left, it went all the way down, because it's debt driven, it's inflationary. And if you have those two combinations, obviously you lose your purchasing power. That's common knowledge, right? And this is very important to understand. So let's keep these three things in mind. The new monetary system, it shouldn't be inflationary, right? And it shouldn't be debt driven, because if there are, will experience a loss of purchasing power, right, over time. So these are three things we need to stay away from, right? We need to learn and stay away from this. Another thing we also need to understand and highlight is the adaptation, right? Is the growth of this this asset. Now that we understand that cryptocurrency led by Bitcoin is the fastest growing asset class, the most lucrative asset class, and it's a technology that you can invest in at the same time. Now, with that in mind, how did Bitcoin grow so fast and hit $1 trillion so fast, faster than any other major company right now? These are the largest companies in the world. They're actually the top 5 companies in the world right now. But Bitcoin, which doesn't produce, obviously Microsoft produces hardware and software. Apple does the same. Amazon is into logistics, right? And Google is into data, right? But what does Bitcoin produce? What does it manufacture? What is it specializing in, right? And this is the beauty of the blockchain technology. It doesn't have to manufacture products. It doesn't have to produce goods. Simply a network effect, meaning that all it takes is adaptation, right? Once it gains adaptation, this asset class just grows like weed, it just grows. And this is what's very important. It's very, very important to understand this concept. We don't need to manufacture things. We don't need to produce things. Simply adaptation. As you adopt this new technology and as you use this new technology, it grows exponentially. So you see how it took it only 12 years. It took Bitcoin 12 years to hit $1 trillion in market cap. And you see how Microsoft 44, Apple 42, Amazon 24, Google 21, and so on and so forth. So it literally took Bitcoin 9 years faster to hit $1 trillion. And with Ethereum is 6 years younger, right? And so Ethereum currently is 9 years in. And with the ETFs and the adaptation of the Ethereum platform and the flippening insight, Ethereum might even hit $1 trillion way faster than even Bitcoin did, right? And there'll be other cryptocurrencies that will hit that trillion mark even faster than Ethereum itself, and so on and so forth, right? And now that we understand asset classes and we understand asset and liabilities, and we understand how these assets are not supposed to be, right? Not supposed to be inflationary, debt-driven, and losing purchasing power. This is not how it's supposed to be. And now we understand how its growth is based on adaptation of this new technology. That's it. The more people embrace and use this new technology, that's how it grows. That's how cryptocurrencies grow, right? This is why communities are so important. And this is why we emphasize on developing assets that are sustainable, right? And now this brings us to the next topic. What's the point of having an asset? Do you remember the definition of an asset, right? The asset is something that you own and that you can easily and quickly convert into cash. That's an asset. So that means that if you can't convert, or majority of people cannot convert their asset into cash, then it's not an asset, right? So let's look at this largest asset right now, known as Bitcoin, right? So right now, Bitcoin is sitting at $1.1 billion. Let's round it up to 1.2 billion in liquidity, right? And we understand that to be a solid asset, you need to be able to convert that asset into cash very, very quickly. And it has to be sustainable too. So if we look at the largest asset though, yes, it's outpacing all the other asset classes. Yes, it's growing exponentially just based on adaptation. Yes. But what's the difference here? What's the point of having an asset that majority can't cash out. If there is a bank run, this asset would literally implode, right? Because there's just not enough liquidity. And the way we've discussed this many times is because of its inefficiency of volume, right? And this is one of the reasons why we really emphasize on the 4 challenges in the space. So this is not just a Bitcoin issue. This is an industry issue, right? We identified that there are 4 challenges in the industry. One of them is the inefficient use of volume. And we will really get into detail with this, and we'll even do calculations. So why is Bitcoin not having more liquidity? It has 1.1 trillion in market cap. It has more than half of the entire, its market cap is larger than half of the entire industry. It has 23 billion in volume every day within 24 hours. But why is its liquidity so meager, right? This is the weakness in Bitcoin. And this is why ETFs are in such high demand amongst institutions and wealthy investors. Is because liquidity, right? Back to liquidity. Institutions, high net worth individuals, they love liquidity, and they feel liquidity is security. It gives people a sense of security because now you understand that, okay, I can easily trade, and this is 61 billion, almost 62 billion in here. So an institution that wants to spend 600 million, they can easily spend 600 or $1 billion in this liquidity fund, and it won't even budge because there's so much liquidity in here. So this is why ETFs have high trading volumes, because there's so much liquidity. In comparison to our largest asset class, unfortunately, if you have such volume, there should be even more liquidity if you're efficient, right? And we'll look at it in a minute in details, right? Before we go and do some calculations and highlight the reason why Bitcoin is inefficient and inefficiently using its volume, how it's not retaining liquidity, and how it's inflationary, right? And how it's not really accumulating incentives or having incentives for the community members. These are the 4 challenges in the space, right? We don't want to be like this. We have to avoid this. So we have to avoid inflation. We have to avoid debt, right? And we have to also, if we can avoid that, we'll avoid loss of purchasing power. And these are things that if we now look at the crypto industry, there is a lack of liquidity, there is inflation, unsustainable staking distributions, right? Because the staking platforms in the industry are very inflationary, and inflationary aspect makes your chart looks like this, right? And we looked at various staking platforms, right? We looked at Uniswap, we looked at Aave. Let's look at them again. Let's look at them again. So we looked at Uniswap. Uniswap, we all know Uniswap. It's the #1 leading exchange, decentralized exchange, amazing utility, hands down a pioneer as far as decentralized exchanges. It's the #1 largest decentralized exchange in the industry. However, and it also has over 118 million volume in one day, right? However, if you look at its chart, you realize that it looks awfully familiar, right? Look at this chart and take a mental picture. Look at this chart and take a mental picture. And then let's put it side by side with this. It looks exactly the same because it's inflationary, right? And if you have something that is inflationary, you lose your purchasing power, right? And this is exactly what we see here. This is the picture that we see here, right? Even though you have over 100 million in volume. And this is not just Uniswap, like we said. If we look at, let's look at Aave, right? Aave is another big player, right? Aave is the largest lending platform in the industry. great utility, right? However, you see the chart is very familiar, looks similar, right? So all these, they have great utilities, however, and also over 100 million in volume, by the way, right? Trading volume over 100 million. But nonetheless, you see, because due to their inflationary nature, you see how their chart looks very similar to the US dollar, right? Inflation does that. Now, another thing we need to highlight is that these charts look like this, but with 100 million in volume, right? This just shows how inefficient these projects are, right? Because you can't have 100 million in volume and your chart looks like this, because this just shows how inefficient your trading volume is. You're not using your trading volume efficiently. Now, let's look at the final one. Let's look at Curve. Curve is known for its staking platform. And Curve has lost 99.5% of its value since its peak. And if you look at Curve's chart, you see how what inflation does to you. Inflation is cancer. Inflation is bad. Stay away from inflation. Everything that is inflationary, especially if they offer staking, don't be part of it, right? And we see the global reserve currency, it's showing us what inflation does, right? Inflation is not good. It spoils, it destroys our currency, right? And this is exactly what we just saw with Uniswap, with Aave, and with Curve specifically, right? Now, if we go back here and we talk about the challenges in the industry, right? One of them is lack of liquidity, obviously, right? Because you need liquidity in order to have an asset. To be an asset, you need to be liquid, because you need to be able to convert it into cash. So assets must be liquid. And obviously the markets are illiquid. If we compare, like we just said, there are 6 billionaires, Bitcoin billionaires, and if one of them just tries to sell, it will be the end of Bitcoin as far as centralized exchanges, right? This is why you see a lot of whales, they take their money off exchanges and go to Coinbase, right? And they rather invest into ETFs, because they know that ETFs are liquid. So liquidity plays a major role. If an asset is not liquid and you can't convert your asset into cash, you have a problem, and that is no longer an asset now, right? So to qualify to be an asset, you need to be liquid. Liquidity plays a major role. This is why we always stress on liquidity. So with that said, I would like us to understand one more thing. There is something called the herd mentality. I'm sure most of us have heard about it, and I just want us to really understand what this means. And why am I bringing this up? A herd mentality is very important to understand what this is, because it explains our behavior, right? So a herd mentality is also known as a mob mentality or a crowd mentality. It's a psychological phenomenon, right? It significantly impacts human behavior, yours and mine. And keep in mind, how is this market driven? It's driven by emotions, right? Fear and greed. So this is exactly what it does. Financial markets, stocks, and the stock market, the crypto market is all based on emotions, fear and greed. And this is led by this herd mentality, right? So it occurs when individuals adopt beliefs, behaviors, or attitudes of the majority in a group, often at the expense of their own judgment or individuality, right? This behavior can be observed in various aspects of daily life, from fashion trends to investment decisions and even political affiliations, right? So we need to understand this principle behind the herd mentality. It will empower us to better recognize the impact in not just our industry, but in our lives as well. So what is a herd mentality? What are the examples? Let's pick out some examples of a herd mentality, right? Herd mentality is, for example, if in a stock market, stock bubble, right? Investors may follow the crowd in purchasing overvalued stocks, right? Leading to financial bubbles and subsequently crash. For example, the dot-com bubble in 2000, the housing bubble in 2008, right? These are examples that show how herd mentality can lead to a market instability and financial losses. We see herd mentality every day with meme coins. Every day we see that with meme coins, right? We'll get to that. Another herd mentality is fashion trends, right? People often adopt popular clothing styles and brands influenced by preference of the majority, right? The rapid adoption of subsequent abandonment of trends can have significant environmental and economic impact. So we always look at, okay, the majority, they wear certain brands and they drive certain brands, also vehicles, and it's a herd mentality. You also have to do that, right? Social media is another example, right? The spread of viral content and the desire to follow popular accounts and engage with trending topics. This is also a form of herd mentality, right? Maybe somebody comes with a new dance. It goes viral now. Everybody from Asia, Africa, Europe, America, everybody now does that specific dance. It's a herd mentality. Same with politics, right? And same with panic buying, right? We just experienced this in during the pandemic. Remember how people were just plundering grocery stores? There was issues with toilet papers, with hand sanitizers, with masks. It was a mess, right? It was a panic. So if we look at it even in more detail, people change their beliefs and behaviors to align with the majority. That's the herd mentality. And I'll break down why I'm mentioning this. Fear of missing out. This is very much known. FOMO is big in crypto, right? Or in the stock market industry as well. It's the anxiety associated with being left behind or excluded from a popular trend or activity that can drive people to conform. FOMO can lead to impulsive decisions, right? Again, this industry is led by emotions anyway, right? It's led by fear and greed. It's as simple as that. So if you don't have your emotions in check, you'll always just be a victim of the herd mentality, for the good or for the bad, right? So we can go on and on, but I believe we get the picture, we get the idea. Why am I bringing that up? Why am I showing that? Because of this. Because of this, right? This Bitcoin is the best example of a herd mentality, right? At the beginning, nobody seems to be wanting to be part of the crypto industry. Nobody once believed in Bitcoin, right? But now, all of a sudden people started adopting it. They saw the price start going up, and guess what? Herd mentality, People now FOMOing in. They didn't want to buy it at $2, but now they're buying it at $60, $70,000, and so on and so forth, right? And people don't want to miss out. And whatever the majority does, we hear, oh, BlackRock is buying it. Venezuela adopted it, right? And Michael Saylor is buying Bitcoin. So now we all have to buy it, right? But the most important thing of an asset, like we said, it needs to be sustainable. It's one thing to be the fastest growing asset class. It's one thing to be part of this industry that is growing the fastest and gives us an opportunity, literally, to be part of the largest bull cycle ever in the industry. But what's the point if we are not efficient? What's the point of all this volume if it doesn't affect the liquidity, if it doesn't affect the supply, and if it doesn't give back to the community? What's the point? Why bother? Because it's not sustainable, it looks like this. It will go up during a bull cycle, even twice, but then just as it went up, it will come right back down 80% again, right? This happens because it's not sustainable. The volume is not efficiently being put into use efficiently, right? There's some aspects that are missing. And what are these aspects? These are aspects we need to understand. If we don't understand this, we will always experience a boom cycle and then bust cycle. Boom cycle, bust cycles every time. There won't be just consistency, stability. There is none there, right? And this is what's plaguing this industry. It's inefficient, it lacks liquidity, it's unsustainable, right? And it's inefficient. Let me not be the one saying it. Let's literally now look at what's needed, what's important in this industry. What's the ultimate asset? We've been talking about assets all for the past hour right now, right? What's the ultimate assets? That's the question today. An ultimate asset has a cash flow, right? Has stability and is growing. Those three things, right? And that's an ultimate asset. That's how an asset should be. So let's compare this to this. Let's compare this to this, right? Because you can't have a cash flow if you are inflationary. You can't have a cash flow if you're debt driven, right? And you can't have a cash flow if you're losing your purchasing power, obviously, right? So how do we address cash flow, stability, and growth? To address this, we have to zoom in and look at our ecosystem, because it addresses all of this beautifully, right? And let's look at them one by one. Again, cash flow, stability, and growth, right? Let's start with growth. How can you grow an ecosystem? How do you grow an ecosystem? It can't grow, obviously, if it's inflationary, because it will just drop. It won't grow. It cannot grow. And it doesn't matter, obviously, how much liquidity that you accumulate and how much volume you have. That doesn't matter, because at the end of the day, it will drop right back down, and because it can't grow. It's inflationary, right? And we saw this with other cryptocurrencies. We saw this with Curve, we saw this with Uniswap, we saw this with Aave, right? This is what it looks like. So you can have 100 million in volume, but what's the point if it's not used efficiently? And this is the issue here. So growth can't be inflationary. So first of all, you have to be at least deflationary, preferably be scarce. And this is the first thing that we're addressing. How are we addressing the growth challenge? Is by scarcity, right? We have a banning mechanism, and we started with 1 million tokens, right? In total supply, we had 1 million. We started with 1 million, and now if we look at Etherscan, we are down to 968,000. So we've banned more than 31,000 tokens, and this is the max supply. This is the total supply. There is no other asset out here that is literally scarce, meaning its total supply is shrinking. Bitcoin is not shrinking. Bitcoin is literally adding tokens every 10 minutes. It's adding coins every 10 minutes, right? It's inflationary. Every 10 minutes, there's a new block with a new Bitcoin. And even Ethereum right now. Ethereum is inflationary by 0.6%. So the last 7 days, Ethereum has increased by over 14,000. And for the month, it's over 56,000 now. So even Ethereum right now, as we speak, it's inflationary, right? It's issuing over 900,000 Ethereum every year, but only currently, only banning 239,000. So almost 4 times, literally more than 4 times, right? It's issuing more than 4 times more tokens than it's burning. So this is not just a Bitcoin issue. It's not just an Ethereum issue. It's an industry issue. And these are applications built on top of Ethereum. And you see how they are. They're inflationary. And if you have inflationary staking platforms, they look like this. They all look the same, even though they have over 100 million in volume. And this is what's plaguing the industry community. And you can't use the same inflationary make a monetary system on the blockchain. It's not going to work. So these are the 3 important things for an asset. Like we said, cash flow, stability, and growth. Now we looked at growth. Growth is based on inflation or deflation. If you're inflationary, you can't grow, right? The only thing you grow is debt. Or inflation, you grow more tokens, and this causes the chart to look like that, right? So that means you have to be at least deflationary or preferably scarce, like we are here, right? We are scarce, so our supply keeps shrinking, and this is what you need. This is how we address the growth aspect out of these 3 different categories, right? Well, let's look at stability. How do we address stability? Easy. Liquidity, right? In assets need to be liquid. If you have a liquid asset, it's stable. Don't believe me? Let's look at stable coins, right? Let's look at stable coins. Stable coins are literally the most liquid cryptocurrencies in the space, right? And because they are so liquid, they are stable, literally. A stable coin that is pegged at $1, preferably if it's liquid and it's backed by liquid assets, it's always going to remain at $1. That's how you address stability. You need mechanisms and tokenomics that embraces liquidity, right? That retains liquidity. And this is how we do it. Through transactions, 3%, we retain liquidity, right? This is how we address stability. And not just through transactions, of course, but also through the 10% that we put aside for staking and buybacks, right? So this 10%, its only work is we stake it in the staking platform, and then all we do is we keep doing the buybacks, right? And stake more, buyback, stake more. And this is how we generate liquidity and we bring about volume, right? And we do this because there has to be at least a smart contract that does that, so that the community, they can do as they please. It's your wallet. You can do as you want. But at least one of us, which is a smart contract, has to do the right thing by keep restaking, buybacks. What does this do? It produces volume, it brings liquidity, and that means it produces even more volume, right? Another way we do it, we retain liquidity, is through our NFT boosters. If you don't have 5 boosters, all you receive is 70% of your USDC distributions. So if you want to have 100% of your USDC distributions, you need to have 5 boosters and stake them on the staking platform. The revenue generated from the sale of these NFTs goes towards liquidity, all of it, 100%. So this is also another way how we add liquidity into our liquidity pool, right? It's not just through taxes. It's through the NFTs revenues. It's through the staking distributions that this 10% reserve receive. And now, finally, also based on the community. The community can decide to do what this 10% does. And this is in your best interest, right? And as it benefits you as an individual, you're literally benefiting the entire community, because when you compound, you burning tokens, right? Because you're trading, that means you're burning more, you're adding more liquidity, you're burning more tokens, and you're adding more USDC distributions. So imagine 10,000 people doing that, or 100,000 people doing that, or 1 million people doing that. I think you get the picture. So as we work together as a community, we can generate our own liquidity. We can retain our own liquidity, accumulate our own liquidity, burn tokens, and accumulate USDC distributions also. So you need to have a platform like that. So now that we addressed growth and stability, how do we address cash flow? How do we address that? We address that by our utility staking platform, right? In a very sustainable manner. Every asset needs a cash flow. You need to be incentivized. What's your incentive? Because you are literally putting your tokens at stake, and you're helping our network, our ecosystem, to do what? With stability. You see this stability? Staking is part of it. How do you stabilize an ecosystem? Through liquidity and staking, right? So liquidity, because the people can trade without affecting the price heavily, and with staking, because now you see this number one wallet is our staking contract. Currently, there's over 57% staked. This is the total token supply. So over 552,000 tokens out of the 968 are staked. So more than half of the total supply is staked. So these are individuals who believe in the ecosystem, who are bringing stability to the ecosystem. They are stabilizing the ecosystem, right? By staking their tokens. So they need to be incentivized for what they're doing. And this is where this comes from. This is where this cash flow comes from, right? Through staking. So if you stake your tokens, as long as there is volume, obviously, as long as we accumulate more and more liquidity, there will be more and more volume. And as long as there's volume, you'll receive USDC distributions. Let's look at our staking platform. It's the number one wallet, like we said, and there's over 57% of the total supply staked, which is over 552,000 tokens. So if we look at the contract itself, we'll realize that this contract is accumulating USDC distributions, USDC token. It's not inflationary. We looked at inflationary tokens here, right? We looked at Aave, Uniswap, and Curve, and we see how their staking platform is causing inflation, and inflation causes the price to drop, right? And we are not giving out our native tokens. Uniswap gives Uni tokens. Aave gives Aave tokens. Curve gives you more Curve. But with our staking platform, we're giving you USDC. So even if you decide to use your USDC for your groceries, for your rent, for whatever you need it for, it doesn't affect the price, right? And this is how we address the cash flow. So now, if you paid attention, these three aspects are being covered by the bull run ecosystem. You have the cash flow, you have the stability, and you have the growth, right? So this is what an asset is supposed to be like. And especially if you're staking, you have to be scarce, right? You have to be scarce. You can't be inflationary. You can't afford to be inflationary, because this is what's going to happen if you're inflationary. So as a staking platform, and staking plays a major role for every proof of stake blockchain, right? And because we are in Ethereum, staking plays even a major role. People love to be incentivized, right? Like we said, everybody wants incentives, especially if you bring and add stability to our ecosystem. You need to be incentivized. And this is where this is covered, right? So we have an ecosystem that is covering these three aspects: cash flow, growth, stability. It's covering all three of them, and it's doing so by using their volume efficiently. Why have 23 billion in volume and you're not, there is no incentive? You're not adding stability to it through liquidity, and you're definitely not contributing to growth, because Bitcoin is inflationary, it's not deflationary, right? So in order to really understand, and we're going to do things in two extremes. We're going to use Bitcoin's volume, and look at, based on Bitcoin's volume, if they had our fundamentals, and if they were addressing these three challenges right here: cash flow, stability, and growth, right? If they were addressing these like we are addressing, and by using their volume efficiently, what would their burn rate be like? What would their liquidity be like? And what would be the incentives be like, right? So incentives, what will it be like? Stability, liquidity. Cash flow is staking distribution. Stability is liquidity. Growth is the burn rate. Inflation, deflationary, scarce. Let's look at those three aspects using their volume, the current volume, right? So let's do that math right now. 23 billion. Let's keep it even. We will use 20 billion, right? So if we go here, and let's start with the burn rate, right? We said we'll use 20 billion. If we take 1%, 1% of 20 billion is 200 million, right? So 1%, that means 200 million worth dollars, $200 million worth of BRL tokens are going to be banned. We'll never see them again. They'll be banned, and this number is going to decrease even more, right? Right now we're at 968,000. Imagine banning 200 million worth of BRL right now at this current price. Imagine that. So we'll lose a bunch of BRL tokens, and this number is going to decrease even more. So 200 million worth of BRL tokens, $200 million worth of BRL tokens will be decreasing. So this number is getting ready to shrink, right? So that's as far as growth, right? So how we're addressing growth is by having a banning mechanism. We don't want our banning mechanism to look like, to cause, because they don't have a banning mechanism. They're inflationary. That's why it looks like this, right? With this type of volume, your chart shouldn't look like this. So now we've covered growth. Growth means banning mechanism, scarcity, deflationary, right? So that means based on Bitcoin's volume, 200 million worth of our tokens will be banned. Now, USDC distributions are also 1%. So that means that this 200 million will go towards the cash flow, staking distributions, right? So whoever decides to stake, if you're among this 57%, you're actually receiving 200 million in USDC every 24 hours. So instead of 1,900, almost 2,000 USDC right now you'll be seeing 200 million USDC right in this smart contract, right? 200 million USDC will be right here in this contract. This is where you'll see it every day for those who are staking. Now you tell me, with such amount of USDC, don't you think that even more individuals will want to stake? So that means that this number is going to increase even more. More people will stake, and because they'll want to be part of that 200 million in USDC, right? That is just taken based on your volume. That's it. It's just from your volume. You're trading this much anyway. You might as well give back to the community. So this is how we address this, staking distributions. Now let's look at stability. This is the most important thing. For a community, for an ecosystem, you want a stable ecosystem, meaning that it goes beyond the 1 or 2 months of bull cycle and then it crashes. Stability means you're avoiding all of these extremes. Every 4 years, you have this chart. Every 4 years, you have another chart like this. You want stability, because as long as you have high volume, you'll gain the stability, but only if you retain liquidity. So let's look at stability. Stability means liquidity. You have to retain liquidity. One of the ways we accumulate liquidity, like we said, is through trading, right, to the taxes. So 3% goes towards liquidity, right? So let's look at, so that means we have to multiply this by 3. Let's do that. So that means 600 million every day, as long as there is 20 billion in volume, like Bitcoin right now. Bitcoin will be accumulating 600 million just in one day. Just in one day. And let's look at Bitcoin's liquidity. Let's round it up to 1.2. So that means that it will take Bitcoin, if they had our ecosystem, our mechanisms, 2 days. 2 days. If they have this same volume tomorrow, they would already catch up with their own current liquidity. So every 2 days, Bitcoin is supposed to accumulate over $1 billion in liquidity. If it had our sustainable mechanisms and ecosystem and tokenomics. If it was retaining liquidity, 3% liquidity, Bitcoin would be accumulating up over $1 billion in liquidity every 2 days. But it's just having 1.2 billion liquidity after 15 years. So let's look at for the whole month. So that means times 15, right? So by the end of the month, if we do this for the whole month, that's 18 billion now. We're looking at 18 billion just for 1 month. Think about that. Bitcoin has 1 billion in liquidity after 15 years. If they had our mechanisms, our tokenomics, as far as liquidity, Bitcoin is supposed to have, in 30 days, Bitcoin is supposed to be sitting on 18 billion in liquidity. This is in 1 month. Now, let's just look at 1 year. Let's look at 1 year. So we're looking at 216 billion right now. 216 billion right now. This is just 1 year. Bitcoin has been around for 15 years, right? So in 1 year alone, using this volume, and we're not even in a bull market yet. So in a bull market, this volume will probably 4x. It'll be around 100 billion every day, at least during a bull market. So you see that with this current volume, and we even took 20 billion, not 23, it will take Bitcoin 1 month to hit 18 billion, so 18 times more than it already has. And in 1 year, Bitcoin is supposed to be having over 216 billion in liquidity. If we go back and look at Bitcoin's ETFs, and this is everyone combined, the entire ETF market right now is at 61 billion after 6 months, half a year. So this means even if they would add another 61 within a year, they would only be at 120 billion, right? So Bitcoin, based on our tokenomics, would be way more efficient than ETFs combined, right? And this is what's lacking in the industry. What's the point of having such high volume if it's not adding any value to the liquidity? It's not giving back to the community, and it's not reducing your circulating supply. So what's the point? Why are you trading so high, right? There is no point. And this shows with this chart, right? If we go back to Bitcoin, this is why you see every 4 years, you see this chart doing this same thing. It goes up and then it drops back again. It goes up and it comes right back down again because it lacks these 3 aspects. It's not incentivizing the holders with USDC distributions. It's not stable. It's not retaining liquidity. And its growth, it can grow, it's inflationary. So these are the 3 of the 4 main challenges in the industry: lack of liquidity, inflation, unsustainable staking distributions, and inefficient use of the trading volume, like we just discussed here. Why have 23 billion in trading volume? They might as well have 10,000 in trading volume. It will be the same thing. So this is just useless. There's no point of having such high volume if it doesn't contribute to the community, to the ecosystem. It's useless. Why have such a high volume? It doesn't do the token any good. It doesn't add liquidity. It doesn't burn tokens. It doesn't give back to the community. So why have such a high volume? They might as well have zero volume, right? Because it would be the same thing. It doesn't do anything anyway. So, and this is what's lacking in the industry community. And this is what an asset is supposed to be. Keep in mind, today's topic is, what's the ultimate asset? The ultimate asset has a sustainable staking distribution, covers your cash flow. It's stable, it's liquid, right? And its growth, it's sustainable because it's deflationary at least. But we went a step ahead and we are scarce, right? Now you have a commodity, an asset that is literally scarce, that you can stake and gives you a cash flow in the form of USDC. And because you're staking and bringing stability, and because we are retaining liquidity, you bring stability into the ecosystem as well. So we are stable with a proper growth, and you have the cash flow. You have the ultimate asset right now. All that is done efficiently using the trading volume efficiently. And keep in mind, actually, the more trading volume you have, the more liquidity we will accumulate. So what does this mean? I want us to think about this. Remember this picture, put this picture in mind. It took Bitcoin, even though it's not incentivizing its community, it doesn't have a staking platform, it's not giving out USDC distributions, it's not retaining any liquidity, and you can't stake it, and it's inflationary. But nonetheless, it took it 12 years to hit $1 trillion in market cap, right? And we understand that the adaptation is based on the herd mentality, right? And what is a herd mentality? A herd mentality can be attributed to several factors. At the top of this list is social influence. It's as simple as that, right? We are inherently social creatures. Human beings are social creatures, and we often look to others for guidance and validation, especially if we are in uncertain situations, right? And another thing we need to also understand is, as humans, our brains tend to take mental shortcuts. And that sometimes causes us to depend on the views and behaviors of others instead of thinking critically, right? So instead of thinking critically and asking yourself what we just discussed, how can you have 23 billion in volume, but you only have $1 billion in liquidity, and there's 6 billionaires? If one of them decides to go rogue, that will be the end of Bitcoin on centralized exchanges, right? And this is why when you see Germany selling, or the Mt. Gox, why did you see a lot of whales selling? Because they panicked. Because they understand that if Mt. Gox dumps $1 billion or $2 billion and there's only $1 billion here, what does that mean? Bitcoin goes to zero, right? So this is why you saw a lot of sell-offs going on just from the news alone that Mt. Gox is selling or that Germany is selling. That's why you see whales panicking and shifting removing their Bitcoin from centralized exchanges and taking them over the counter to Coinbase to sell it or to buy ETFs. They're selling Bitcoin and buying ETFs because it's more liquid, right? So liquidity is very important, community, very, very important. And what I was trying to make, the point I'm trying to make here, and I'm closing with this, is that the way blockchain technology grows is adaptation. And adaptation has a major influence on herd mentality, right? And when people observe the actions of others and assume they are based on accurate information, they may follow suit, creating a domino effect. This is what happens with meme coins every day. And this is what happens with Bitcoin every day. Once Bitcoin starts hitting 60,000, 70,000, 80,000, guess what happens? Herd mentality. Everybody now goes. Larry Fink is talking, buy Bitcoin, it's going to run out. Michael Saylor is talking, buy Bitcoin, it's going to run out. What happens? Everybody's now buying Bitcoin. Bitcoin price goes up, but the liquidity is not gaining. And then the same whales that are using these individuals as exit liquidity, because they have to tell you that they need, how else will they remove their money? They're stuck. They can't cash out. They need unassuming retailers like you and me that are not informed, that are uneducated, that don't understand that there is not enough liquidity. And to have an asset, the whole idea of having an asset is that you can convert it into cash. Your asset is useless if you can't convert it into cash. And if Bitcoin doesn't figure out a way how to retain liquidity, it will lose liquidity, and at least on centralized exchanges. And people will be stuck with their Bitcoin on exchanges, and they can't sell it. Now they're stuck with their Bitcoins on centralized exchanges, and they can't sell it. And this exchange will go bankrupt, and your Bitcoin will belong to them. And you have to wait for years, just like Mt. Gox situation, maybe even 10 years again, until you might get a fraction of your money back, right? And this is what's causing so much panic among Bitcoin whales. So they're trying to find ways how to lure people like you and me to buy Bitcoin, provide liquidity so that they can cash out and go and get ETFs, because ETFs are more liquid. So now they're stuck with Bitcoin. They can't sell it. They're panicking right now. And this is why you see everybody saying, go buy Bitcoin, go buy Bitcoin, go buy Bitcoin, because they need your liquidity so that they can get out of it. This is how it works. And this is the trap that Bitcoin and other illiquid assets, cryptocurrencies, are putting you in. So if you want the ultimate cryptocurrency, it needs to have these three aspects. It needs to issue you distributions, needs to incentivize you for helping to stabilizing the platform. And this growth is based on being in deflationary and scarce. If not, you won't experience the growth, because you just see this sign right here. Similar thing with Bitcoin, same thing with Aave, Uniswap, like we saw here. Same thing, right? Same chart. This looks identical to this. It looks identical. This happens to everything that is inflationary. This is why inflation is poison. Inflation is bad. And your cryptocurrency needs to be scarce, if not deflationary. It needs to be deflationary at least, if not scarce. And right now, there is no asset that is scarce. We saw Bitcoin is inflationary, right? We saw Ethereum is inflationary, right? Solana also is inflationary. So these large blue chip blockchains, they're all inflationary. And we all understand what inflation does, right? We all know exactly what inflation does. And this is why we stress on addressing these three aspects: the cash flow aspect in USDC distributions, stability by retaining liquidity, and growth by burning tokens. And the fourth one is inefficient use of volume. This is why we did the math. We used Bitcoin's volume to calculate how much liquidity they would have, right? And we saw that within a year, they'll be sitting on 216 billion, right? And if Bitcoin was liquid like this, there wouldn't be no point for ETFs. There won't be no ETFs. And you and me would benefit heavily from this, because Bitcoin, the largest cryptocurrency, would be so liquid, and all of this money would trickle down to Ethereum, to Solana, to Binance, to all other aspects, to community tokens, right? But now all of that is going to ETFs. Why? Because Bitcoin is inefficient. It doesn't have mechanisms built in its smart contract to accumulate liquidity, to burn tokens, and to retain distributions to incentivize the holders. So that means it doesn't have the cash, it doesn't give you the cash flow in the form of USDC distributions, and it doesn't stabilize its currency. This is why you see all of these ups and downs, right? And it doesn't retain, it doesn't, the growth part is the inflation part, right? It's inflationary. And this is why you see the charts like this, especially the ones with the staking platforms. That's the message for today, community. We needed to understand that, yes, cryptocurrencies are the fastest growing asset class. Yes, they're outpacing every other asset class. We're seeing it clearly here. The only time Bitcoin wasn't outpacing was during a bear market, right? But outside of a bear market, Bitcoin was outpacing gold, bond market, real estate, stock market, everything, blowing them out of the water, right? But what's the point of doing all of this with an asset that doesn't give you any distributions, doesn't retain liquidity, and doesn't burn tokens, is not deflationary at least, right? And this is what sets our ecosystem apart. From day one, we calculated that if Bitcoin had our mechanisms, imagine how much, this is a lot of liquidity. And if you have 200 billion in liquidity, imagine how much volume you'll be having. You'll be having trillions in volume. Let's do this thing. There's only a billion in liquidity, right? Only 1 billion in liquidity. But look at the volume, 23. So it's safe to assume that whatever your liquidity is, you get at least 20 times more in volume, right? So let's just do the math, right? So the factor is 20. Actually, it's 23. Let's use 23 right now. So now that means if we want to know at least what the volume would be based on this type of liquidity, we have to, let's multiply this by 23. So this is for a lot of zeros, I know, right? This is close to 5 trillion. 5 trillion in volume. So based on the liquidity of 216 billion, Bitcoin is not supposed to be on 23 billion right now. It should be on 5 trillion in volume. Keep in mind, the entire crypto space is only sitting at 2. The entire crypto market cap is 2 trillion right now. That's it. So Bitcoin alone is supposed to have more than double, actually 2.5 times the current entire market cap in volume alone. So this just shows you how this works. This is how it works. This is why Bitcoin is beating out everyone. It's based on adaptation and herd mentality. It's as simple as that, right? People observe what's happening and they FOMO, and there's a domino effect, and this is how it grows. So imagine domino effect on something positive, domino effect on more cash flow, more stability, and more growth, right? Imagine the domino effect and the FOMO that is going to happen when they see how much liquidity is there, how much is being banned, and how much USDC that is being distributed. That is real FOMO. That is real FOMO. So this is why we say Bitcoin currently is very inefficient, extremely inefficient. At its best, within a year, it's supposed to be sitting at 5 trillion in volume. We won't be needing ETFs at all. We're not supposed to have ETFs. But because of Bitcoin's flaw, ETFs are now sucking in all the liquidity, right? And this is what we want to avoid. Once we get even a quarter of that type of volume and market cap, we won't have to worry about BRL ETFs or survivor ETFs or killer whale ETFs, because we'll have our own liquidity that is high enough, and we won't need no ETFs. It will be strictly community driven by you and me. And another thing, and this is how I'm closing, if you have such deep liquidity, community, you don't need centralized exchanges. You don't need no black rocks to come in. You don't need to tokenize things, right? And you don't definitely need credit. Credit is needed because there's a liquidity problem in the industry. People don't have liquidity. Assets are not liquid. So now they have to go and take on debt. They have to take on credit. This is why you see here, credit is 75% of real world assets. is credit. People need credit. People need liquidity. People need money. But because it's a debt-driven monetary system, and there's lack of liquidity even with the largest asset, people have no other choice. The only choice they have is to go and borrow more debt. That's the only way. They have to borrow debt to pay the mortgage, right? We just read it here. They have to pay the mortgage right here. They have to get more liabilities now. People own more liabilities because they have to get their mortgage, they have to max their credit cards, they have to pay back their student loans, and they have to pay back the car note. How will they do that if their assets are illiquid? If Bitcoin is illiquid? How else? Now they have to go and take on debts. And this is why we don't have a debt-driven, but we have a liquidity-driven monetary system. We flip everything on its head. So instead of lacking liquidity, we see how much liquidity will be accumulating. This is insane. 5 trillion in volume alone. Do you know how much? Okay, let's do this last math. This type of liquidity, this type of volume, 1% of it. I'm just curious. 1, 2, 3. So this is almost 50 billion in one day. With that type of volume, this is how much. This is almost 50 billion, and this is 1%. So 50 billion will be going towards USDC distributions. Those who are staking will get that type of USDC. And 50 billion worth of BRL tokens will be banned. And now, let's see how much liquidity will be accumulating. To do that, we'll have to multiply this by 3 now. So in one day, based on that volume, we'll be accumulating over 150 billion just liquidity alone in one single day, just one day. And let's go crazy here. This is one day. So what about 1 month? 1, 2, 3, 4. So 4.5 trillion in 1 month. This is liquidity. There is nothing that is as liquid as this. There is no asset that is this liquid. There is nothing that is this liquid. Nothing. This is in 1 month. Now let's go another step and make it for a whole year. So this is 53 trillion. This is almost double the current. This is 1.5 the current debt, monetary debt of US debt right now. So 53 trillion would be in the liquidity in 1 year, within 1 year. And now you do the same thing from here again. You take 1% from here now again, and you keep doing this. Now we are sitting at half a trillion already. Half a trillion now goes towards banning, half a trillion goes towards USDC, and we multiply this by 3 again, and you see how it's getting crazy now. Now you're sitting at 1.6 trillion in one day in liquidity. You see how it happens. The more liquidity you have, the higher your volume. I need us to understand that. So it's not stagnant. It's nothing that is going to just remain stagnant. So because of this mechanism, we'll be able to fulfill what a real asset is. Asset is supposed to be converted into cash. How will you do that if you don't have a mechanism that keeps just doing numbers like this? This is insane. There's nothing like it, period. And people will be forced to get more and more liabilities because debt is the big business right now. You see here in blue, 8 billion in private credit. Because people don't have liquid assets, they have to take on more debts. They have to take on more liabilities. So this is how Bullrun, Killer Whale, and Survivor will be great assets because they're focusing on liquidity. And the moment people understand that assets are supposed to be liquid, assets are supposed to be converted into cash, they'll also start focusing more on retaining liquidity, right? And like we close, make sure that your asset has these 3 mechanisms. Make sure that you get your USDC distributions sustainably. Make sure that your ecosystem is stable, right? by retaining liquidity, and make sure that the growth is in check, meaning that it's deflationary, at least scarce. That's it for today, community. That was the message for today. Now we understand which asset class is the most profitable. That's the cryptocurrency asset. But now that's not enough. We need to see that these assets are liquid, that we can cash out, right? How do we do that? We have to ensure that there are these three aspects. We have the cash flow, we have the stability, and we have the growth. And we're doing this in an efficient manner by using our volume efficiently, right? Not like Bitcoin right now. And we avoid inflation. That's important. Avoid inflation at any cost. And don't use debt. Use cash flow. Use cash flow. And the only way you can have cash flow is by having a sustainable staking distributions, like we have our mechanism. So this is it for today, community. Let me come back to you and check with you how, whether you have any comments or feedbacks or things that you want to share with the community. And I hope that you've been engaging with the tweets as well. Bear with me as I'm sharing my screen here. Okay. Let me come back to you, community, and check with you here. Okay, we saw here that the last time we saw that the survivor was out. I'm not sure how many more tweets came out. Yes. We see here, greetings, family. Yes, we can hear you. Buron tweet is out as well. I see here Killer Whale was out as well. Great. So all of them were out. All of them are out, community. That's amazing. I see Queen Cozy was here as well. Greetings, Buron family. Hoping everyone is doing well. Looking forward to an enlightening session. Thank you, Brother Steve, for your dedication. Thank you too very much, Queen Cozy. It's always a pleasure seeing you in the community. We are all very much, you are very much appreciated. We have Queen Evelyn here as well. Thank you, Steve. Buron Life, good to be here. Whales are here. Don't miss out this opportunity. The dream ecosystem that you can ever had. You missed Bitcoin. Don't miss BRL Survivor Killer Whale. Thank you so much for your efforts. Thank you for your input. You are very much appreciated. Thank you so much for your contributions, for your feedback as well. We have my brother Abdullahi is here as well. Warm greetings to you all and my sincere apologies for being late. It was due to circumstances beyond my control. It's recorded. You can listen to it. Myself, I had technical difficulties at the beginning anyway, but it was sorted later on. Better late, but you came. Thank you for taking your time to come and be part of this session today. You're very much appreciated, Brother Abdullahi. See my brother Mike is here as well. Greetings to all. I hope everyone is well. Always a pleasure seeing you, Brother Mike. Seeing you in the community. Thank you for being part of this session as well. Brother Junior is saying, Akwar Malimu, thanks for the empowerment, and may you continue being a blessing endlessly to even more souls out here. Thank you so much, my brother. It's very much, you are very much appreciated. I'm so happy to see you here today. And yeah, let's catch up outside of today's YouTube. Miss you a lot, and I'm happy that you're with us today. BRL has it all: liquidity, cash flow, stability, and growth. Efficient use of volume. Absolutely. Thank you so much for your feedbacks. These are very, very insightful. My great brother Theo also says here, thank you kindly for another wonderful mind-opening session. Great professor. And thank you for bringing that calculator. Thank you for bringing that calculator out to top it all off. Salute and thanks again for all that you do for us all. It's a pleasure. It's a pleasure. It's the right thing to do, my great brother Theo. You know, it's the right thing to do. We have to bring out that calculator. So I want to thank you all, community, for showing up today in such number. You're all very much appreciated, and I just feel these positive vibes that our community is really enthusiastic. We are growing steadily. We are very consistent. We are showing up. We are, everybody's contributing to the best of their abilities. And this is exactly what we need to really get to our goals, our collective goals. Keep in mind, we have a platform that we don't have to hustle on our own. We all working together. Everybody's input, everybody's effort contributes to everybody's success, So we are all chipping in, we're all doing our parts. And you showing up today in such great number, you being so consistent, showing up on every community event, you're playing a major role in the success of this ecosystem. And it also shows us that you really understand what it takes to really build a community that is strong and that will really thrive during the bull market, right? And everybody will want to be part of such a community that is very active on all social platforms, like on Twitter, on YouTube, on Telegram, and especially we have such a large, queen community. Without our queens, the majority of individuals here are queens, so we have a very large queen community, and thanks to the survivor token and the survivor community, and of course the killer whale community as well. With that said, community, I want to thank you all very, very much. And once more, we see here Queen Bao says, family, let's all like and then leave a comment when the live ends. This plays a major role. This goes a long way, as it really helps the algorithm to reach as many people as possible. So this will help us, bring more awareness to our industry, the crypto space, and most importantly, to our ecosystem as well. With that said, community, I want to thank you all for your feedbacks, for showing up, for your consistency, and it goes a long way. Let's keep this momentum going as beautiful things are about to happen, are taking place. Today, I heard that the numbers came out and inflation dropped to 3% apparently. So I'm curious to hear by the end of the week what the decision will be, latest in September, the interest rates are supposed to be cut. Based on the Feds, the interest rate cuts should come before the election in November, and then apparently after the election also. So beautiful things are ahead of us, community, and we can really look forward to an amazing bull cycle, and especially having such a platform that is literally built to retain liquidity. And we now understand that an asset needs liquidity, because at the end of the day, your asset is really the important thing about an asset is that you'll be able to cash out. That's the most important aspect for all of us, right? And we don't have to panic because there's not enough for everyone, right? This is why we have multiple ways to retain liquidity, to accumulate liquidity, to really develop a platform that is sustainable. And the more it grows, the more we all can appreciate it, So with that said, community, I want to wish you all a wonderful rest of your week. I really appreciate you all. Once more, sorry about the technical difficulties at the beginning. Thank you nonetheless for showing up in such numbers. It was nice to see familiar faces out there, family out there, and I'm glad that you took your time to be part of this session today. I want to wish you all much safety. Stay blessed, stay healthy, and let's hear again from each other latest by Saturday when we have our next community event. And once more, let's engage with the tweets, and let's ensure that we engage with this video today, right now as well. I appreciate you all. Have a wonderful, wonderful rest of your week, and let's keep in touch, and let's see again soon. I see some comments here. Queen Alice is asking, how do you advise those with small amount of money what to buy first? Queen Alice, we're really not financial advisors. All we do is literally we inform and we educate and we inspire. You are free to decide how much you and which tokens you want to purchase, as far as purchasing is concerned. And as far as which tokens, the BRL token, Queen Alice, is the main token, and it's the only token that you can stake. And I see your second question here is in regards to staking, right? So this is why I can answer this by telling you that if I see that you're interested in staking, and the only token with amongst these three that you can stake is the BRL token. So if your aim is to stake, definitely BRL is the only token that you can stake within this ecosystem. So that's how I can answer your question. And you know, it's upon you. That's the beautiful thing, you know. We can decide to buy as much or as little as we want. You're free to do so. And BRL is the only token that you can stake, but the other ones have the same characteristics. They're very deflationary. Killer Whale and Survivor are deflationary, and they also have the abilities to retain a lot of liquidity simply because the total supply of Killer Whale and Survivor were already placed in the liquidity from day one. So all it knows to do is be deflationary, right? So and more Survivor tokens and Killer Whale tokens are removed through banning out of the liquidity pool, and more ETH is replaced with it. So this just shows you how deflationary it is, and in the mid to long term, it retains healthy liquidity as well, just like BRL is doing. The only difference is you can stake BRL, and BRL removes tokens from the total supply. Those are the two only differences, basically. I hope that answered your question, Queen Alice. But thank you so much for your feedback and your questions. And it's always nice to see you in the community. Thank you for your activity. Thank you for your consistency. It's always nice to see you. If you have more questions, I advise you to join the Zoom. I'm sure Queen Bao will be very happy to help you as well. If you have more questions, or if you want to learn how to stake or so, I'm sure you'll be able to do so, you know. So that's what I can say. But a community member here said that by compounding your staking rewards, 200 a month can turn into a month. I'm not going to talk money and speculate, but I'm just highlighting what a community member said, and you can take it with a grain of salt. And that's one of the things that you can talk with the community about. You know, there's certain limitations that we have, but community members are free to speak and talk and speculate and calculate and do all these things as far as prices and that is concerned. But if you have more questions, like Queen Val already responded here, feel free to join Zoom. It's open every day. Feel free to learn more. Keep joining our community events. I'm sure you're already part of the weekly Sunday Queens meeting, and we'll answer your questions as many as you have. So community, once more, I want to thank you all. I hope your questions were answered, Queen Alice, and everybody else's. With that said, if there's nothing more coming from your side, I want to wish you all a wonderful rest of your week, and I hopefully see you again tomorrow as we retweet, and latest by Saturday when we have our VC on Telegram. Once more, thank you very much, community. It was a pleasure being here with you today. Thank you for being part of this session today. Bye-bye, everyone, and see you soon.